Have you ever found yourself in a financial bind and considered a payday loan as a quick fix? Before you make that decision, it's crucial to understand the full picture of what payday loans entail and the potential pitfalls that come with them. Welcome, my name is John, and in this video, we're going to delve deep into the world of payday loans. I'll provide you with everything you need to know about how these short-term loans work, the hidden fees and high interest rates that come with them, and most importantly, how to avoid getting trapped in a cycle of debt. Stay tuned until the end, as I'll share some valuable tips on alternative options to consider when facing a financial emergency. Let's start by unraveling the mysteries surrounding payday loans. Payday loans, also known as cash advances or paycheck advances, are short-term loans designed to provide quick cash to individuals facing unexpected expenses or financial emergencies. While payday loans offer immediate relief, they often come with high fees and interest rates, making them a costly borrowing option. Understanding how payday loans work is essential when considering them as a financial tool or solution for your immediate financial needs. Let's delve deeper into the mechanics of payday loans to grasp their implications and potential consequences. Payday loans, also referred to as cash advances or payday advances, are short-term loans that provide borrowers with quick access to a small amount of money. These loans are typically intended to cover unexpected expenses or financial emergencies that arise between paychecks. Payday loans usually involve small amounts, often around $500 or less, and are due to be repaid by the borrower's next payday, typically within 2 to 4 weeks. One key feature of payday loans is their accessibility. Unlike traditional bank loans that may require a lengthy application process and credit check, payday loans are often available to individuals with poor credit or no credit history. The process of obtaining a payday loan is relatively straightforward, making it a convenient option for those in need of immediate funds. Borrowers typically need to provide proof of income, a valid ID, and a checking account. Lenders may require additional documentation, but the application process is generally quick and easy. Once the application is submitted, lenders assess the borrower's eligibility based on income and other factors. Approval for a payday loan is often quick, and funds are typically disbursed on the same day or the next business day. The loan terms of payday loans typically involve small amounts ranging from $100 to $1,000, depending on the lender. The loan amount is due to be repaid in full, along with fees and interest, by the borrower's next payday. Repayment of a payday loan is typically done by providing a post-dated check to the lender or authorizing an electronic debit from the borrower's bank account. Failure to repay the loan on time can result in additional fees and interest charges. While some lenders may offer the option to renew or roll over the loan for an additional fee, this can lead to a cycle of debt if not managed carefully. While payday loans provide quick cash in a pinch, they also come with significant risks and dangers that borrowers need to be aware of. Understanding the key risks associated with payday loans is essential for making informed financial decisions and safeguarding your financial well-being. One of the primary risks of payday loans is the high fees and interest rates they often come with. Payday loans can have exorbitant fees and interest rates, making them an expensive borrowing option. The annual percentage rates on payday loans can be extremely high, often reaching triple digits. This means that borrowers end up paying significantly more in fees and interest than the original amount borrowed. Another risk of payday loans is the short repayment period. Payday loans are typically due to be repaid in full by the borrower's next payday, usually within 2 to 4 weeks. This short repayment period can make it challenging for borrowers who do not have the funds to repay the loan on time, leading to additional fees and charges. Due to the high costs and short repayment periods of payday loans, borrowers can easily fall into a cycle of debt if they are unable to repay the loan on time. This cycle of debt occurs when borrowers renew or roll over the loan, incurring additional fees and interest charges. It's crucial for borrowers to carefully consider the terms and costs associated with payday loans before taking out a loan. Defaulting on a payday loan can have negative consequences for a borrower's credit score. If the loan is sent to collections and reported to credit bureaus, it can damage the borrower's credit history, making it harder to qualify for other forms of credit in the future. Additionally, some payday lenders engage in predatory practices, targeting vulnerable borrowers and failing to disclose the full costs of the loan. Borrowers should be cautious when dealing with payday lenders and carefully review the terms and conditions of the loan. When facing a financial emergency, it's wise to explore alternative options to payday loans that may offer more affordable and sustainable solutions. Be sure to consider these alternatives when seeking financial assistance, starting with personal installment loans, which allow borrowers to borrow a larger amount of money and repay it over a longer period in fixed monthly installments. These loans typically have lower interest rates than payday loans and may be a more affordable option for those in need of funds. Credit unions will also offer small dollar loans to their members with favorable terms compared to traditional payday loans. These loans may come with lower interest rates and flexible repayment terms, making them a viable alternative for borrowers in need of quick cash. Meanwhile, some employers may offer paycheck advances to their employees as a way to help them bridge financial gaps between paychecks. These advances are typically interest-free and come with minimal fees, making them a cost-effective alternative to payday loans. While not ideal due to potentially high fees and interest rates, a credit card cash advance can be an affordable option if used carefully. Borrowers should be mindful of the costs associated with cash advances and repay the borrowed amount promptly to avoid accruing additional fees. Building an emergency savings fund can also provide a financial safety net for unexpected expenses and emergencies. By setting aside a portion of your income regularly, individuals can avoid the need for payday loans and rely on savings in times of need. In some cases, reaching out to creditors to negotiate payment plans or extensions may be a viable alternative to taking out a payday loan. Many creditors are willing to work with borrowers facing financial difficulties to find a mutually beneficial solution. Now, let's go over some tips for managing your finances effectively and safeguarding your financial well-being. Effectively managing your finances is key to avoiding the pitfalls of payday loans and maintaining long-term financial stability. First, develop a detailed budget that outlines your income, expenses, and savings goals. Track your spending to identify areas where you can cut back and allocate funds towards building an emergency savings fund. This emergency savings fund should be able to cover unexpected expenses and financial emergencies. Aim to save at least 3 to 6 months' worth of living expenses to provide a financial safety net in times of need. Also, practice mindful spending and avoid impulse purchases that can strain your finances. Before making a purchase, consider whether it aligns with your financial goals and priorities. On top of this, take some time to educate yourself on personal finance topics such as budgeting, saving, investing, and debt management. Take advantage of financial literacy resources and workshops to enhance your financial knowledge and skills. If you have existing debts, prioritize repaying them to reduce interest costs and improve your financial health. Consider consolidating high-interest debts or negotiating with creditors to create a manageable repayment plan. Don't forget to explore government assistance programs, nonprofit organizations, and community resources that offer financial support to individuals in need. These programs may provide assistance with housing, utilities, food, and other essential expenses. Finally, consider seeking guidance from a financial advisor or credit counselor to receive personalized advice on managing your finances and achieving your financial goals. A professional can help you create a financial plan tailored to your unique circumstances and implement strategies to strengthen your financial resilience. Remember, proactive financial management is key to achieving long-term financial stability and building a secure financial future. By taking steps to manage your finances effectively, you can avoid the high costs and risks associated with payday borrowing and choose a suitable solution that aligns with your financial goals and circumstances. As we wrap up our exploration of payday loans, I want to leave you with a thought-provoking question. Have you ever considered alternatives to payday loans when facing a financial emergency? Share your insights in the comments below. For more free and practical information on managing your finances and making informed financial decisions, check out the link in the video description. If you found this video informative and valuable, don't forget to give it a thumbs up and subscribe to our channel for more insightful content on personal finance and money management. Thank you for watching, and remember, your financial well-being matters.